Is investing just for the super rich, or can everyday people like you and me actually build wealth? That's a question I asked myself exactly 1 year ago when I decided to dip my toes into the world of investing. And not just any investing, I went with a robo-advisor, specifically Wealthsimple Invest. For years, investing felt like this mystical, complicated thing, shrouded in jargon and exclusive to those with finance degrees or trust funds. Every time I thought about it, my mind conjured images of bustling trading floors, rapid-fire stock quotes, and complicated charts that looked more like abstract art than financial data. It felt intimidating, inaccessible, and frankly, a bit scary. The idea of losing hard-earned money was a major deterrent. So, like many, I just didn't. My savings sat in a high-interest savings account, earning a measly fraction of a percent, slowly but surely losing ground to inflation. But then, I started hearing more and more about robo-advisors. These platforms promise to simplify investing, make it automated, and most importantly, make it accessible to everyone, regardless of their financial expertise or the size of their initial investment. Wealthsimple, in particular, kept popping up in my research. Their marketing was slick, their interface looked user-friendly, and the idea of set-it-and-forget-it investing was incredibly appealing to my busy schedule and limited financial knowledge. So, after much deliberation, reading countless reviews, and probably watching way too many YouTube videos, I finally took the leap. I opened a Wealthsimple Invest account. My goal wasn't to get rich overnight, that's a fantasy. My goal was to demystify investing, to see if I, a regular person with a regular income, could actually participate in the growth of the market and make my money work for me. I wanted to build a habit of consistent investing and understand the process. This video isn't about giving financial advice. I'm no expert, and you should always do your own research and consult with a financial professional if you have specific needs. This is about sharing my honest, unfiltered experience, good and bad, from my first full year using Wealthsimple Invest. We're going to dive deep into everything: how easy it was to set up, the fees I encountered, the performance of my portfolio, the exciting part, the pros and cons I discovered, and whether I'd recommend it to someone just starting out. So, if you've ever wondered about robo-advisors, or if you're thinking about starting your investing journey, stick around. This is my story. Getting started, the initial setup and user experience. First things first, let's talk about the onboarding process. This was a huge selling point for me. Wealthsimple's promise of simplicity wasn't just marketing hype. Signing up was incredibly straightforward. I downloaded the app, answered a series of questions about my financial goals, risk tolerance, and time horizon, and within minutes, I had a personalized portfolio recommendation. They ask you questions like, what's your investment goal? Retirement, a down payment, general wealth building? When do you need this money? Short term, long term? And crucially, how comfortable are you with risk? This last one is key. They use a scale, typically from 1 to 10, to gauge your comfort level with market fluctuations. A lower score means a more conservative portfolio with more bonds and less volatile assets, while a higher score leans towards a growth-oriented portfolio with more stocks. I remember agonizing over the risk assessment. On one hand, I wanted growth. On the other, the thought of seeing my money drop was unsettling. I settled somewhere in the middle, opting for a balanced portfolio. This meant a mix of equities, stocks, fixed income, bonds, and even a small allocation to gold, which Wealthsimple includes in some of its portfolios for diversification. This automatic asset allocation based on my risk profile was one of the biggest appeals of a robo-advisor. No need for me to pick individual stocks or ETFs. Wealthsimple did all the heavy lifting. Funding the account was also simple. I linked my bank account and set up recurring weekly deposits. This was another non-negotiable for me. I knew that consistent, automated contributions, regardless of market ups and downs, were crucial for long-term success. It removed the emotional aspect of trying to time the market and simply focused on dollar-cost averaging. The app itself is incredibly intuitive. Clean design, easy to navigate, and all the essential information is readily available. Checking my balance, seeing my contributions, and tracking my performance felt effortless. For a beginner, this user-friendly interface is invaluable. The numbers, fees, and performance. Now for the part everyone wants to know about, the money. Let's talk fees. Wealthsimple Invest charges a management fee based on your assets under management, AUM. For accounts under $100,000, it's 0.5%. If you have over $100,000, it drops to 0.4%, and for accounts over $500,000, it can go as low as 0.2%. On top of that, there are also management expense ratios, MERs, for the underlying ETFs in your portfolio, which are charged by the fund companies themselves, not Wealthsimple. These typically range from 0.12% to 0.22% for their standard portfolios and a bit higher for socially responsible, SRI, or halal portfolios. So, for my initial investment and consistent contributions, my effective fee was around 0.5% plus the MERs. Compared to traditional mutual funds that often charge 2% or more, this felt incredibly reasonable. Over a year, on a modest portfolio, these fees amounted to a very manageable sum, significantly less than what I would have paid with a human advisor or high-fee mutual funds. The transparency around fees was also a big plus. It was all clearly laid out on their website and in my account statements. And the performance? This is where it gets interesting. My first year with Wealthsimple Invest was a bit of a roller coaster, as markets often are. I started investing during a period of moderate volatility. There were weeks where my portfolio dipped, and honestly, that was hard to watch. My initial instinct was to panic, to pull my money out, to cut my losses. But this is where the robo-advisor model really shone. Because it's automated, and because my risk profile was set, there was no temptation to make impulsive, emotional decisions. Wealthsimple automatically rebalanced my portfolio when certain asset classes drifted significantly from their target allocation. This buy low, sell high mechanism is built in, forcing a disciplined approach. With that said, thanks for watching and until next time.